Good day, and welcome back to the Life License Qualification Program video series. What we're going to spend the next few minutes talking about is the uses of insurance in a business scenario. Now, let's say that we have this particular business. We have Susan and her bookstore. Some of you might recall this business from back in Module 11, Group Insurance. We've already done some group insurance work for this business. We've put into place group insurance benefits, but that's only going to protect the business. Now, Susan, as the owner, says, well, I have some responsibility here to make sure that the business is looked after in other ways too. Now, you might recall that our book appraiser, this person right here, had a specialized skill set. This person is very difficult to replace. As such, we might identify this person as a key person or a key employee, or you'll even occasionally still hear it in the industry today, a key man. So this key person, our book appraiser, is somebody without whom the business would suffer. And Susan would have to come up with some way to replace this person if something happened. As a result, we can acquire key person insurance. There are two types of key person insurance that we can acquire. We can acquire key person life insurance and key person disability insurance. Now, the underwriting is quite complicated for key person insurance. When it actually comes time for you to sell a key person insurance policy, if you ever do, you're typically going to have to gather financials for the business. We're going to have to prove that this person has some value to the business. And typically the amount of benefit that we're going to have paid here is going to be something like 2 times this person's salary. So we really look on their salary as an indicator of value. What the business does with that money, because the business will be the beneficiary of that policy, so what the business does with that money is up to the business owner, the manager, but most likely the money is going to be used to go out and find somebody to replace our deceased or disabled book appraiser. It might be used to train somebody. It might be used to train somebody from right within the business. Might be used for advertising costs, might be used to replace the income that person would have generated for a period of time. So there are a number of different applications of that money. The important thing for the business owner is that we go through this planning process and we say, hey, business owner, what happens if something happens to your book appraiser? They might have their own individual life and disability insurance. That's great. That money is going to help to take care of their families or their own personal expenses, whatever you have, but it's not going to help the business out, not directly. So we put in place a key person insurance policy to help cover that situation off. Now you might also recall that I said Susan really does the bulk of the outside sales for the business. Susan herself is fairly integral to the day-to-day operations of the business because of her role as the salesperson. And because of that, we might put in place a business overhead expense policy. Again, the underwriting for a business overhead expense policy is quite complicated. We're not going to be able to buy one of these for everybody who works in the business. But Susan, in her role as a salesperson, is going to be in a situation where if she becomes disabled, at that point, the business is going to have a difficult time getting by. So the business might have a tough time paying its bills. Well, that's where a business overhead expense policy kicks in. Now, in reality, this business is probably just a little bit too big for business overhead expense to be practical, but I did want to take the opportunity to show it to you here. More often than not, you'd see a business overhead expense policy in a smaller company, maybe 5 or less employees. But you could see it here. It would be possible, but less common than in a smaller company. But what would happen here is if Susan did become disabled and we did have a BOE policy in place, the BOE policy would start to pay benefits normally within about 2 weeks to about 3 months after Susan's become disabled, and it would pay benefits to the business in an amount equivalent to the overhead expenses of the business that are not met by its other sources of income. We might do that. more likely, in a business this size, though, we would treat Susan as a key person and maybe insure her that way. So that if she became disabled, then there would be money available to help make up the missing income. So maybe not a BOE policy here, but it is possible. So then, what else do we have? Well, Susan is the full owner of the business. So if she dies, what happens to her shares? Well, most likely they would pass to her heirs as named in her will. With only one owner, we don't have any complications where there's mixed ownership. But let's say that Susan brings in a partner. She wants